Hello traders, question I am going to sort of answer in this video, or certainly in the front sort of few minutes of the video, is: are chart patterns more important than Fibonacci's and other tools such as that? Well, I'll answer that by just going through a quick demonstration here. This is the pound yen on a 60-minute chart with just a 55-day moving average running through it. Now, on the face of it, that we had quite a lot of red to the downside from March 10, and then since March 25, 26 we're seeing a little bit more blue, a little bit of a push to the upside. But if you start to put a chart pattern on here and look at the highs and lows, if I mark off this low here from March 13 and run that across, you'll see we've had 1, 2, 3, 4 areas of pushing up, and then we've had, actually you can see some of my red arrows already, 1, 2, 3, 4 arrows to the downside, so pretty evenly matched. This is basically a line of fire. This is what I call a line of fire in this chart. So this could potentially, any real confirmation of opening and closing above this could confirm that the selling is over and this can move up. But if we see continued selling, if we really start closing lower down here, then I would consider this to be a good short. To keep matters as simple as possible, I would suggest you, particularly when you've got a chart that just cannot hold the daily moving averages, just keep shorting any highs. So shorting any squirts, any high RSI was a good opportunity here. See those lower highs there, and particularly when you get under a trend line like this, just horizontal support and resistance, just keep shorting. Even when you get a good few hours pushing the upside, just keep shorting, because the trend's not over until you at least close above a fire line like that. We'll look across the daily chart shortly, but to answer your question, well, it's my question, not yours. When you start drawing on this and start looking at what's going on, one of the most powerful setups is a wedge breakup or a wedge breakdown. So we've got a triangle here, we've got an ascending triangle underneath the resistance up here. So if we start breaking down here, closing under 17750, closing under particularly this 1770, I think there's a decent chance we can come down to 175. So that's quite a decent number of points. So what I've done here is I've just shorted a very small position, a couple of pounds a point, just at the highs here, just to see if we can close underneath here. Overnight we've got Chinese manufacturing. A lot of data coming out of China has been very poor, so if this is a poor level of data, then we could really sort of lose our footing here and come and test that 175, which I talked about over the weekend. Okay, so now if you combine patterns with fibs, then it's much more powerful. So if we then add a trend line, and let's take that away and just talk in keep basic terms of support and resistance. So we've talked about that line in the sand being 178.20, and you can see, okay, and we've held this trend line since we started forming it on the 10th. The FOMC formed the main sort of pivotal point of that trend line, and then we didn't get even close to it until yesterday, when we just nudged above it and then held above it for a lot of today, but then we're struggling at this resistance. So like I said, just keep shorting with something in a downtrend like that. Just keep shorting until the trend is over. But if you now, let's look at fibs. If you put fibs on the whole big move right down to the lows even, you can see that these are just narrowly poked its head above the 50%, sold at the bottom of the fib zone, and here we are just drifting back down, potentially down to the bottom here, which is going to give us, oops, I didn't mean to do that, which could potentially give us a move to 174. It's coming up on 127 extension here. But I've sold a couple of pounds a point up here, and I'm looking for 175. My stop is just a few points at the moment. If I start to, by the time I end this video, I've got a little bit of a buffer. I might even move it to, I think I'll probably move it to at least 825, and just see if I can lock in a little bit of profit. Right, so I would just use both. What you could do is have fibs on, say, a 3-hour chart, and then chart patterns on an hourly, that kind of thing. That is looking as if that is wanting to come down. And we've seen this pattern up here. We've seen this pattern just ticking away on throughout as it stepped down, made lower lows and lower highs. So we had a lower high, lower high, lower high, lower high, push up, lower high, that actually closed lower here, closed lower here. As you can see, it's been stepping down. All the highs are being sold, so it stands to reason if you're going to push the upside and you have a reason for shorting it, you know, it's failing on a pivot, then go ahead and short it. But you can use your patterns and your fibs to find out where those pivots are. Right. Excuse me, but the winners in this game have been the people who have been just marking this out and shorting it. Okay, we'll do more of that in the room. Sometimes the problem in the room is that obviously there's specific times, and these charts don't always set up in the peak time. Sometimes you have to wait till the end of the sessions and the early part of the sessions. So that's why it's important you learn these skills of marking up your charts and finding these patterns so that you can mark these up and tell us about them in the room, in the Skype room and the trading room. Okay, so let's have a look at the daily chart. Let me just get that out of the way. Okay, this is the daily chart with the black lines are monthly pivots, and then we've got the 33, 55 and 200 day moving average. So at the moment we haven't closed above this 33 day moving average since March 10. That's the last time we closed above it, when we started this move to the downside. Not that many higher closes here. We have got 3 higher closes now, Friday, Monday and today, but it is pretty feeble and we still can't close above the 33 day moving average. So all the time we are doing that, it is still worth shorting. Intraday you can buy some major support. You got 100 points on your belt, then lock it in. If it closes above the 33, hold it. If not, consider flipping it, because at the moment the shorts are the trend. Okay, so I'm seeing some evidence of this trying to hold, but not seeing any confirmation. So I am just waiting to see if I'll put that at the monthly pivot. And you can see this is a potential way to break down, because we start closing and start breaking 176.50, or even today's low 177, that could tumble. Right, other charts. Fed. What am I talking about? The Dow slipping back, so it's pushed up. It's nestling in this support. It had a big day yesterday, just broke out at the open, and that's not a great chart. Yeah, like I said, this is one way you could trade this is just to keep shorting the highs, because once you've got all these red bars here, you've got a lot of red bars here, you've got a lot of red bars here, here, here. If you want to trade the trend, then and you've got all this selling up here, then just sell into resistance. And 18,000 was a major resistance level. I did actually make money out of this by trading the open range. Earlier on in the session, it spun up. Let's look at it. The open range was, I can just detect it, the high and the low there. And earlier in the session, it came back and held there. So I took it up from 17,850 to 70,900 roughly. So I actually got, yeah, I actually got this move here. Sorry, I took it up. It actually went through about 918, I think 915, 918. I took it off at the 900 and got 50 points out of 1, 2, 3, 4 moves. Notice how this moving average really created quite a barrier for it. I actually thought this would hold up here. I thought we'd hold 179. I thought although the 1 hour was showing some issues, we were closing higher. In fact, we closed higher into the penultimate hour. So something must have caused that. That looks like a piece of data that's come out, because that's pretty nasty. Okay. So, wow, while I'm making 50 points on the upside, that was getting ready to short. I think the one thing to note was this bar here was a nice reversal bar, which we never breached. And yeah, now we closed, just open, closed higher on it, but we didn't open and close above it, which is my preference for a real reversal. So this reversal bar has held from 5 o'clock UK time, and now we are seeing that fall off. Back to the dailies. I think we've got non-farm payroll Friday. You've got the some preliminary job data tomorrow. I still think this will hold. I think we'll come back and hold this, test these hammers, and then push back up. But obviously that is not a great close. The only moving average we are above is the 200. So that is weak to sideways on the basis that yesterday was such a bullish buy. Actually, we've had this before, haven't we? We've had a big Monday push to the upside, and then the rest of the week we've sold off. I'm trying to think where that was. I think it was this week here. I remember doing a video saying, wow, this is a nice bullish close, and it spent the rest of the week selling off. We could find ourselves in that situation as well. Okay, look across the markets. So that's the way the pound yen is looking at the moment, edging its way 5 points under that 17800. Looking weak. The pound US is just clinging on, a bit of a hammer-like bar there in that inside that box, but still trapped in that range. Pound yen we've looked at several times, so let's move it on. The pound Aussie dollar is just narrowly above 195. That's the wrong one. So fantastic pattern there. So I would still buy pullbacks on this. I would still alarm, let's think, 194. It's such a bullish chart. I need to try and buy 194 tomorrow and see if we can push up into what ultimately aim for a run for 200. Euro was a bit tough to trade today. From the point of view, a lot of this was overnight. A lot of the selling was overnight, sitting on that monthly pivot. But nonetheless, that is still very much a short signal. So 108 is a good potential sell entry. Euro yen, same story. 129.50 is a potential area to short. Let's look at the gold and the oil. The gold is trying to hold up, but it's weak. All the moving averages are above us, so that looks lower. Could at least retest 11.75 tomorrow. And the oil, that is still selling at the highs as well. Yeah, broken under that. Very feeble volume. The highs are selling, and that looks set for a retest of at least 44.50 invents tomorrow. Okay, I hope that helps. I'll do more on chart patterns as time goes on. Let's see if I can find my favourite. Let's find the euro. This is one of the most powerful chart patterns known to man. If I can just get this positioned properly. One of the best chart patterns out there is that funnel pattern. You ever see that? And of course that works well in reverse. It's a little bit of a wedge breakout, only it gets to a finer sort of apex. It's very, very powerful, and that has led to the demise of the euro versus the dollar. Okay, I hope that helps, and see you in the room tomorrow.